welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Our weekend show here, the Broiler Chickens. Bark, bark, bark. Where are we here? 19th of October, 2025. Something's supposed to happen right around this date. Oh, something. Anyway. I guess I would imagine quite a few of the crypto kids a little bit disappointed in this year's anticipated cycle pivot. A little bit about wah, wah. But I suppose that's capitalism for you. I'm not exactly sure how to best help you people in this environment, and I start these videos off of late kind of with that statement. As the newsletter points out here, never a lack of excitement around Mr. Trump's presidency. I suppose it wasn't the case last cycle, and he's carrying on his tradition of, I don't almost call it, it almost feels like it's like organized chaos in a weird sort of way. I suppose we are starting to see some cracks in the foundation. Regional banks, and keep in mind the Fed down in the States, they're kind of at war with the regional banks because the Fed is sort of like the money-centered banks, and the European Rothschilds, all those kind of people, their controlling interest in this central bank sort of theme, global order, all that crap. So the sooner that the Fed puts, I think there's something like 5,000 banks down in the States. As soon as the Fed can get rid of those regional banks, they can exert a heck of a lot more control over the U.S. banking system. And one might argue through the last cycle pivot, we had the savings and loan crisis, which was in essence the Fedsters putting all those regional sort of mom and pop, think of It's a Wonderful Life. I can't remember. Harry, I think his name was. Anyway, the lead character. Their savings and loan, put all those mom and pop financial institutions out of business. So I wouldn't be surprised if regional banks and even local banks come under a lot of pressure here over the next few years. It's going to be quite a bumpy ride, that's for sure. Unfortunately, it does feel as though, especially since we are in the quote unquote greed cycle part of this cycle, I think you can literally see the preference in assets and their respective performance, i.e. the stock market. And what I've seen of late is things like crypto related stocks have done very, very well. I think there are a lot of profits to be had. I mean, hell, even if you bought Bitcoin when you were supposed to, you should be up about 5-10x now. So it does feel as though we are going through some sort of cycle pivot. A little bit concerning there of late, hearing the overt bullishness towards crypto. And some names in particular, which surprised me a little bit. I mean, it doesn't surprise me hearing it come out of people who really aren't very good at timing purchases and happen to be in political offices at present. I think you all know what I'm talking about, or offsprings of A little surprised to hear Arthur Hayes as bullish as he is. And I think Tom Lee is sort of in that camp as well. Especially when I look at the Ethereum chart, it's just sort of like, oh boy, are you guys serious? What am I missing here? Something's not right. Anyway, market will do what the market does. Unfortunately, it's very difficult. I mean, you see this price chart. Is Brian ever going to say, "Oh yeah, go and buy that. You'll do great"? In fact, you see where I was buying. Try and force yourself to come in at the bottom ends of ranges. Just rinse and repeat. It's the same old, same old. Nothing really changes in this game. And if you follow the rules, which I know is extremely hard to follow, and especially young men who need to get rich tomorrow, they have a very, very hard time following the rules. But if you follow the rules and just play it conservatively, generally speaking, you can do pretty well at this game. And that's sort of like the financial planner, broker, fellow of the Canadian Securities Institute guy talking to you. And the irony of it all is that if you actually can do better than 30% annualized rate of return, you've beaten like more than 90% of all investors ever. The key there, though, is to do that 30% year in, year out, year in, year out, year in, year out. That's the tricky part. This is the easy part to bang out these monster wins. The tricky part here is don't get suckered in to actually now buying into these stories at these prices, because then you might sit underwater for like years. So, I've on the Twitter feed and of course on the website, I post this ad nauseum and stuff. I mean, the writing's on the walls here, folks. And I do like the idea that actually, if I take this study and I apply it to things like the 4-year money cycle, things, interestingly enough, even gold's price performance, remarkable how a lot of correlation here. I mean, actually, stunning amount of correlation. I did do that Wall Street silver guy interview, but that was like middle of the week. I haven't heard back from him. I have a funny feeling I probably said something in the interview that they didn't like, so they said, screw it, we don't need this guy." It's fine by me. But maybe months down the road we'll see something from those people. I have no idea. It was actually an enjoyable interview. I do like talking to Ivan. He's a very personable guy, for whatever it's worth, for the record. No animosity. It's just kind of funny how we don't need to get into that stuff. Anyway, in that interview, I actually had a very specific list of conversation with them. Maybe that's what we can do here. Try and help you see the market a little bit the way that I see the market right now. Maybe I can do it over here. Gotta tell you, this is a really interesting study, although you crypto fans, you probably don't want to see this. This is the spread or the ratio between the price of 1 ounce of gold and one Bitcoin. And it's interesting to see over time how many Bitcoins and how many ounces of gold it took to buy each other respectively. It does feel as though, and I think this was heading in Bitcoin's favor from that last cycle pivot. It does feel as though Bitcoin price appreciation has hit a level that probably it just can't get through. And now gold, of course, is waking up. So interesting how that W is coming in right there. I would expect just a normal technical bounce up into 38.2s to 50%. So I think it does look to me like gold's going to outperform Bitcoin here, which of course you guys don't want to hear. Well, I don't know. When I first got into this space, most of the audience was just crypto. We hate fiat. We hate everything, legacy markets, all that kind of talk. I do think that the audience has matured a little bit over the years dealing with me. And of course, I'm pretty much asset agnostic. I don't really care. All I want to do is I want to buy W's and sell M's. I don't care what it is. This could be the spread between broiler chickens and pork bellies, right? Who knows? I don't really care. All I care is, holy geez, look at that W. As I had, and I was telling that Ivan, right? And as I tell everybody, we at heart, whether if you fancy yourself a technical analyst, and it's kind of tongue in cheek, but if you fancy yourself a technical analyst, we are all card carrying members of Bert's National Association of W Lovers, whether you like it or not. If you want to make money from trading, and you don't want to buy unless you actually see W's and price charts. And the problem here is, look at this mess up here. That doesn't look very W-ish. In fact, what scares me is this is starting to look a heck of a lot like this, right? We're basically at the end of this cycle. I suppose the good part about this image is we don't have an M yet, but notice Bitcoin can just basically slide right off its peaks. Then you don't actually see the M until we're a million miles lower. So Bitcoin does have a habit of doing that. And I did put out a note recently saying, when the cycle peak does come and it goes, after the fact, you'll see, oh, yeah, well, it looks like the cycle rolled over here, as the study sort of suggested. But by the time we come here, it's way, way too late to take profits. So I do suggest, I don't know whether a lot of people listen to me. I will say, I think I've made a pretty resounding impact with this whole sell half on a double kind of principle. And I actually even have heard people say, in previous cycles, I would ride the whole thing up and then ride the whole thing down and hate myself for a year or two following. Now, since I bought Larry Parker's program, if you know who Larry Parker is, he was a famous lawyer in the South Bay in the 1980s. Larry Parker got me $5.2 million. He could win for you too. Hi, I'm Larry Parker. Anybody that lives in the South Bay knows those are the days of Wally George. Actually, Jim and Liz, you might be old enough to remember Wally George. I don't know. He was down in the South Bay, though. I don't think he was up in your neighborhood. TBG, do you remember Larry Parker? Man, those are the days. Yeah, you'd be old enough to remember him. Do you remember Wally George? Wally George was a character. He used to do kind of like Wayne's World, a public access cable show out of Orange County. Oh man, those were the days. Oh, goodness. Anyway, I'm dating myself there. But the point here is that if you can get yourself into these habits of, just trying to pay yourself when this silly market does actually appreciate, I think it makes playing this game a heck of a lot easier. It's less emotional driven and more mechanical driven, mechanically driven. And, as I'm sure all of you are aware, I fancy myself kind of like a Morpheus type character, which means I kind of want to be the demonstrator of best practices. And my job is just to show you this over and over and over and over and over and over. And we did go through quite a spat of profit taking opportunities. Did you take the profits? Well, that's up to you. But I will say there are a lot of people that I've worked with over the years that are thankful for learning that simple sell half on a double strategy. And you don't necessarily have to sell half on a double. In fact, actually, this Coinbase was sell half on a triple. Well, if you sell half on a triple, not only do you get your original money back, but you even got some to pay the tax bill. And you also still have half of that original position. So really, that's just really a question of we got to figure out what strategy works best for you psychologically to make you feel confident going forward. But the only way you can really do any of this kind of stuff is you have to plan for it ahead of time. You always have to plan for it ahead of time. And it's fine, if you have your plan, kind of like that. I think this coin was actually a pretty good example. I gave the market the opportunity to face rip here. If it wanted to, and we were in a very face rippy kind of mood there, middle of the summer. And things sort of started to stall out. And then we did like reload zone retest and started to show signs of fatigue. So I was like, all right, we're starting to see signs of fatigue. Let's just start, letting them have some. And the good part about this strategy is I haven't sold all. If there is another leg to go higher here, great. I still got plenty more to let the market have. And the irony of it all is based on all the principles I teach everybody, we all have a pretty good idea where this thing's probably going to come back to. And I'll probably just go buy these shares that I sold up top here. I'll probably just go and buy them right back where I actually was originally long. That's the irony of this game. The more things change, the more they stay exactly the same, folks. Nothing really changes in this game. In fact, we had a new person come to the TRI website yesterday. Hey, I'm new. I have no idea what the fuck TA is. Oh, goodness. I want to get rich in crypto. Here I am. And I just spent, and what scares me well, I'm not going to talk about what scares me. What I'm going to simply say is I jumped into the lounge and just, sort of talked this person through sort of what they're really here to learn and what they're, how do professionals behave in the marketplace versus your very typical gamblers. And the sad part about it, folks, is, just hear me now, but believe me later. Right? How does that go? I think it was Hans and Franz. There's another 80s reference for you. Most people in the public do horribly at this game. Absolutely horribly. Most people lose money at this game. You need to understand that from the get-go. And it's probably why I don't have nearly as, high a following, is that I tell you all of you the truth. Nobody wants to hear the truth. Like I said, I was a little disappointed. I think this Ethereum chart's a pretty good example. And I don't like how these people just don't really put their sort of quote unquote recommendations into context. But we have a pretty well-defined rolling top happening here in Ethereum. And people coming out and saying, oh yeah, year end, we'll be at 10,000. That's a crazy ass bold statement. I don't quite understand how they can make those kind of statements. And the message that I just put out for the public was, maybe just how about we see some W's, right? That might be a good start. I had a specific chart that I was referring to because I'm sure a lot of people look at my charts and go, I have no fucking clue what the hell's going on there, Brian. That's just a whole bunch of spaghetti. I can empathize. So I thought I had, maybe I have it. ETHUSD. What was it? It was crypto, and I think it was this crypto one, or maybe it was the index. Yeah, there we go. I suppose, well, this is kind of a good sign. I thought this was off of a daily chart, but I must have had that on 4 hour. Yeah, we had some nasty topping action up top here. Just nasty. I don't know. I mean, maybe that's a level. The problem here is, geez, isn't the market smiling at us? I see that and that and that. So, I mean, usually like Elliott Wave guys are like, well, A, B, C, D, that's it, we're done. Yeah, maybe 38.2s. That's good to see. So we could probably start thinking about things like bots, but just gotta see some W's here. And I hate when these tops look like this because really this thing isn't going to start quote unquote trending until we really get structure above this level. You know, it was a good example of that was Bitcoin through the weekend. Um, Actually, I think I had that over. Oh, it might have been one of these. Yeah. It's a cute little setup. It was a 30-minute setup. So I don't know whether I really like talking 30-minute setups with you guys. You can't really follow up what happens following after the fact, but guess that's what's going on in this funny little Bitcoin. Cute little bot, A, B, C, D. I might even get filled on a take profit order there. Fad move stop to scratch. This speaks to the mechanical nature of how I look at the market. But I guess what I was looking at through the weekend, yesterday we were sitting in the lounge just going, all right, is this thing going to bottom? Is it going to top? What the hell is it going to do? And it just kept running into this trend line resistance. You can see we broke a couple trend lines here, so that was good. And then finally, I actually started to get bullish on the other side of this trend line break. It's interesting how close it came to my stop there without stopping me out. But I have a funny feeling that we're going to be in this kind of crazy ass market state here. And if you look at that Ethereum, when I look at the daily chart, it's going to take a bit of lifting here. And Mahanj is, just like this. And what I wanted to say was notice how we played against the trend line, started to spook out, then finally broke above the trend line, then started to put in structure, and away we go. So, the people all getting like uber bullish of Ethereum. And keep in mind, this is the weekend. So we better be careful here through the weekend. Pros come back Monday morning and kaboom. Anyway, is that what I wanted to show you? I guess so. I did hear John Bollinger talking a bit about how he was seeing his Bollinger Bands were squeezing in double bottoms in his indicator. So I suppose that's a good sign. But just off of here, I've got the moving averages bearish. 13 EMA should act as pretty good resistance. This is this sort of pie in the sky image that I show. I guess, one thing I do like to see is we got a little bit of a bottom coming in here on momentum, but I sure would like to see this turn up. I don't have any W's here to work with at all. And where the hell are the buyers? I mean, the most important thing for bull markets is you got to see buyers step up and buy. Cute little inside bar, and kind of like that Bitcoin 30-minute setup I just showed you. I kind of think that's what's going on here. It's interesting how this candle, though, did flush through all of these lows. I would have probably drawn this off of here to here. And then something like that. So we did do 33, but only there. So no, actually that wouldn't have been any good. This would have been very difficult. Something along those lines. Messy. Especially, and you know what? This is actually a really good tell that whenever you see a candle like this, that's your message. You're being told that the higher ups, people who have deep pockets, all that, they're trying to wash out as much liquidity from the market as possible. Interesting to see whether they took this up first and then down, or took it down first and then up. But and I have seen this, like we saw this, like I said there, in the Bitcoin chart overnight. but to a lesser degree. They weren't able to take out the key support there, which was that sort of bot setup A, B, C, D. But it does look like they took it out on this Ethereum here, just sort of fishing for liquidity. But I think on balance, they're trying to take this thing back up. And it's understandable too, right? Where's it? Last Monday, we started this slide. So at the very least, we should be thinking about things like reload zones. Up into that area. So Mountain Man's pretty good reference. 61.8. Yeah, probably somewhere around that. Somewhere between 4,000 and 4162. But Willie's already getting stupid. So that's getting a little dangerous. Divergence building in momentum already. So you can kind of see RSI's even got a bit of a div working here. No M's yet there in RSI. So I don't think there's any reason to be thinking down yet. But with Willie being stupid like that, that in itself means there's no way I can come in on the buy side here. And I don't even really think this set up very well. I suppose you could argue, well, there is a nice W there. And we probably could have done reload zones off of this range. 61.8. And I hate when W's come in just a little bit above that 61.8 level. I can't take that trade. It's just too risky. So this probably wouldn't be something I'd be interested in. So kind of like that Bitcoin that I showed you a moment ago. I don't know whether this was tradable or not, but if we're just looking at levels, there's your A, B, C, D. So that means we want to probably, I guess, do we go off of that low now? I'm not, again, actually, it'd probably be important just to see what happened there. Oh my goodness. Okay, so they took it up first and then down. So this is going to be sloppy. You know what? I'm not even going to talk about a trade because I don't see one here. I see just a whole pile of mess. But let's see what kind of levels this produces. Boosh. All right. And yeah, this makes sense. So the A, B, C, D takes us up into these highs. And then if we really get going, Alt AB equals CD, punch our way all the way up into 88.6 of this range. So this little bottom, whatever it is, and frankly speaking, when I see bottoms like this, it's like, woo, all right, we're going to rally, but then we got to come back down, test the damn low. And I wouldn't be surprised. I'm seeing this a lot in the markets that like Monday, Tuesday, you mysteriously see a rally. People all start getting bullish. Then Wednesday, Thursday, they break the market and everybody goes, oh, that's it. We're going to zero. Panic buy your puts. And then mysteriously Friday, they rally it out of nowhere. And of course, because this is crypto, it has Saturday, Sunday to continue that dead cat bounce. So Monday, Tuesday, they'll bump it up here and rinse and repeat. This is for whatever it's worth, 30, 40 years working in the marketplace here and trading away. I can absolutely tell you this feels like the most manipulated market I have ever participated in. The market manipulation is just so staggering. It's everywhere. And I might argue that really that's exactly what we should expect through these cycle peaks. This is, in essence, I think this is the 1% transferring wealth from the public, whatever wealth they have. And I think half the reason why this isn't as high as it could be is because the public just is feeling poor as shit right now. The 1% is getting out and the public is being encouraged to get in. Anyway, that's my 2 cents, whatever it's worth. So, this is very, very difficult part of the market cycle. A lot of cross currents, tons of people talking about getting rich. My hunch is now we'll have the conversation start about how this time is totally different than the last cycles. Those old cycle people don't know what the hell they're talking about. And they'll try and pump this thing up. Um, for this audience, I don't think the public understands this, and I certainly don't expect them to. This is way beyond their pay grade. I think that liquidity is very different right now than the sort of quote unquote normal liquidity that you were all sort of accustomed to back when like interest rates were zero and the cost of money was nothing. I don't know where the hell I have that. What did I label it as? Thought I just labeled it as liquidity. It's in here somewhere. I follow way too many charts. Where is the liquidity? Actually, this is it here. I think that the world, like I said, I jokingly said there just a few minutes ago that I think that the public has no money. The public is broke, and they're getting absolutely squeezed by this inflation. If people 5, 10 years ago were living paycheck to paycheck, what are they living now? And I actually think that people are living in debt and they're racking up more debt. They see their governments basically endorsing this idea that we're actually not going to live on income. We're just going to borrow against the future, i.e., deficits. And if they say it's all right, then the public thinks it's all right. This is a potion for disaster as far as I'm concerned. But this is a liquidity picture. And, by the way, here are those crypto cycles. This was the last cycle peak in Bitcoin. And oh, look at that interesting image. This was the cycle previous. Actually last time Donnie was president, ironically enough. That was the CME listing. And I wouldn't be surprised if they see the stock market, how it also peaked right around the same time. And you look at your liquidity picture and SpaghettiOs. Down goes price. So, I've said before that, you can map out the happening events and plot dates on them. And this is an awfully fun study, but I actually think that there's no accident to these cycle pivots. I think they actually happen exactly when they're supposed to happen. And I mean, let's not bullshit each other, right? Let's just call a spade. What letter of the alphabet do you see here? It's not rocket science. There's something clearly broken here. And Mr. Powell was, sort of quizzed about liquidity in his latest sort of formal press conference following the last cartel meeting. It's remarkable how this cartel just owns our society, and nobody says boo. Other cartels, oh, they're evil monsters. This cartel, oh, well, you better not say anything or you won't get your home loan. Oh, goodness. Or you might get like IRS audits mysteriously happen. Anyway, there is that market structure signal staring us in the face here, folks. So, as I said there a moment ago, I don't think that these cycles are disconnected. And then also too, if we look at our 4-year money cycle, I think that the Americans themselves are very late to the party with regard to to them lowering interest rates. Keep in mind, most of the central banks around the world, like in my country, they've taken short-term interest rates down to like 2.5% or so, something like that. So interesting. Here is the 1.382. There is actually where I actually think we're going to get the signal to start accumulating Bitcoins again and crypto and all that. Here's the Americans begrudgingly lowering their interest rates here. But if I actually put this interest rate curve, short-term interest rates for like European short-term interest rates, China D short-term interest rates, they've all substantially moved lower. But the point here is that, ironically enough, seeing the price of gold do what it does through this window, this is sort of like, please, please go and spend money. We've got to make sure that the economy keeps growing. So we will make the borrowing of money to be spent less. But this is an interesting cycle because keep in mind, crypto, of course, got its start when money cost nothing. And then through the sickness window, they artificially made money cost nothing. But this was a trap. And actually, I think this is actually what started this whole inflation problem that we're living in right now. And you remember they went and like printed money like it was going out of style. M2s all went crazy and all that. But we're definitely not anywhere near those rates. So the cost of money is actually pretty high right now. And I think this is the number one reason why your altcoins and your shitcoins and stuff that is technically worthless, why none of that market has really done anything here. I mean, we had sort of the Solana craze there, I guess about a year ago now? But that sure seems to have dissipated. But nothing in comparison to the insanity that, especially this part of the market. This was such a fun part of the market where we were banging out like 10 doubles in one day in altcoin land because it was fresh and it was new, and we were sort of the first responders or something to a new market, so the percentage returns were ridiculous. But we're definitely not that kind of environment this go round. And just look around. I remember back here, man, everybody was flush with money. Well, maybe more like here, right? 2015, 16, 17, you didn't hear anybody complaining about money. At least I didn't then. Nowadays, oh God, you talk to anybody about money and they're all like, don't talk to me about money. So, very different world that we live in. And, I think the important thing, we all need to respect Mr. Benner. I don't know whether his cycle pivot comes in at the beginning of March or near the end, or beginning of the spring of 2026 or near the end of 2026. Interestingly enough, this sort of November, December 2026 is actually the date when I can actually start thinking about buying crypto again. Imagine that. So I like the idea that Mr. Benner is looking for some sort of cycle pivot. My feeling is it comes somewhere around the middle of the year. I guess the reason why I think that is I don't know whether I have it here handy. Actually, I think I do. I think I have it on here. And I think this is probably a broken record for most of you, but what the hell? If anything, I hope you appreciate that my message is fairly consistent. It's the same message over and over and over. I'm a big fan of these long-term cycles, and they've proved correct in their own weird way. So there's no reason for me to change this thinking. We're working our way through the millennials greed cycle. And this should go on into like 35. Next Jupiter Saturn cross is in like 40. So I think this is going to be like a rolling top that occurs over like 5-10 year period. Kind of like the way that and the similarities between the greatest generation and this millennial generation, absolutely shocking. It's quite remarkable how similar they are. The only difference is, I suppose, this generation, man, a hell of a lot of people had to sacrifice their lives through that great resetting. It was a very bloody experience. So far, so good. I suppose if you're a Russian, you'd probably argue. I think the Russians in the Second World War lost something like, I want to say like 20 million people. So right now, Russian dead is up to about a million. I suppose Ukraine's probably at about a million or so. So they've done about 10% the equivalent in Europe to what this great resetting had to go through. So I don't think we're done through this great resetting by a long shot. And then also too, well, anyway, that's not the point of this conversation. What I wanted to show you was if we zoom in on this particular price action here. Ironically enough, I think we're just like, right on schedule. It really sucks horsecocks because it just shows that this whole fucking thing is all rigged. But I think we're sort of working our way up into here. Then we have to kind of go sideways for a few years as we go through that Benner cycle pivot 26. And then I've shown you the absolute insane inflation numbers from what was it, 1947 and 48. And that was basically through that period, the stock market it came off. This is about a 20-30% correction. But more importantly, the prices at the grocery store go absolutely through the roof because they're printing money like fucking drunken whores. Great reset, Bretton Woods, all that kind of shit's coming down the pike here over the next couple of years. So yay for us. And then if we actually zoom in on what I think that actually looks like, I think it kind of looks like this. So we're grinding our way higher here. We peak somewhere through this sort of early part of the coming year. And then there's some sort of shock that hits us about the middle of the summer, maybe the end of the spring kind of idea. And then we have to basically sit in the shit for probably a couple of years, if not longer. Coincidentally, we do have Jerome Powell leaving the Fed here this coming spring. And, if you're a sports fan, take notes. What does the market usually do when a new Fed governor is appointed to the U.S. Federal Reserve Board? Hint, hint, hint. Go check out when Mr. Greenspan was appointed to the U.S. Federal Reserve Board chairmanship and what happened shortly thereafter. So I think that's what this is. And unfortunately, this is on a non-adjusted basis. So I think the market looks like this because they'll just fucking print money like it's going out of style. If you actually look at the monetarily adjusted number, it will probably be a bigger correction, but you won't see that because these prices will be propped up because the money printer goes brrr. The sad part about it is, I thought this was interesting. Do you actually think that gold prices are high right now? I might actually argue that this is sort of what you see in the newspaper here today. But I might actually argue that the gold price is actually at the same level it was in 1987. It's the same level it was in July of 2011. These are the same numbers. That's kind of shitty, eh? This is the theft of inflation. In essence, whole generations of wealth have literally been stolen from them through this price inflation mechanism. just so sad. This is your loaf of bread at the grocery store. This is your pound of bacon. Although I don't think they even sell bacon in pounds anymore. This is your dozen eggs. This is your your can of Campbell's soup. I remember the longest time a can of Campbell's soup was in 29 cents, 39 cents. You go to the grocery store nowadays in Canada, and that can of fucking Campbell's soup, it's just like this big. It's like $3. It's like, you gotta be kidding me. In essence, just add a zero onto the end of all your price tags. Boom. You have officially been great resetted. And the irony of it all is if you actually look at gold on real terms, we're not actually really even that high. We've actually just been sitting in a trading range for the past 40 years on the gold price. Bet you didn't figure that. Oh, goodness, this world. So, I don't know how high this has to go. I mean, clearly we have no leadership at all. That is actually like, you know what, we got to get the this whole price problem under control. No leadership whatsoever. And I remember in the 1980s, I went to New York and I visited Donnie, one of Donnie's first complexes, and I remember everything was all this tacky fake gold everywhere. So, do you think Donnie likes gold? Does this play into Donnie's gold plated everything, but tacky fake gold? I don't know whether he has actually any real gold or not, but anyway. So, that unfortunately is a really sad commentary on how manipulated this society really is. This actually isn't a very high price for an ounce of gold right now. It's just this thing that they're pricing in. That's what this line is getting worthless by the day. But this does bring us back to that interesting conversation about Bitcoin and the gold ratio. I wonder if gold's still got some room to go. Think of it this way: if it's hit 4,000, 4,200, whatever, what's stopping it from hitting this huge psychological level of $5,000? Nothing. If anything, this $5,000 number is a huge magnet. It's just going, wow, 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 come to me, baby. Anybody who remembers TRI from, I guess, 5-10 years ago, we used to always do that. So, this crazy ass world. They always say, in history, they always say, don't fuck with your country's money supply. This is exactly what happens when you fuck with your country's money supply. Anyway, there you go. So happy, joy. Sure hope you're enjoying the presentation here today. I suppose we ought to get back to the old Bitcoin. Considering the way that gold is acting, I do think that a certain portion of sort of the flight to, oh my God, we got to get the hell out of fiat and let's go find proxies that are theoretically fiat dilution immune, if there is a term. I get the impression that a lot of people looked at Bitcoin and said, well, this thing has come up an awful long way here. Do I want to go buy an ounce of gold and bury my head in the sand, or do I want to go and buy Bitcoins as my hedge? I can understand someone would look at that image and go, yeah, that's a bit expensive, and where are reload zones? Curious, I haven't updated these numbers in a while. Where even if we just did, this is time-tested principles. Don't overthink this shit, people. Reload zones, where could I realistically invest? Even, nanny nibbles, all that kind of stuff looks like somewhere between, let's call it 40 G's on the downside to 50, 60 G's on the upside. Anywhere in that window seems perfectly reasonable. And of course, there is your 4-year moving average sitting on Bitcoin. Bitcoin loves to trade back to its 4-year moving average. So I can understand why some people looked at this chart and went, I don't know. I don't know whether I really want to go and buy that as my hedge. Every single cycle that I've been through, I always ask the same question as these prices are moving up, and every single cycle, it's always been the same way. And I don't know whether the community is actually programmed to think that way, but when we go zooming up here, and I remember specifically I did this, I was like, okay, well, what's the cost of production? And ironically enough, at this point, I seem to remember we all came to the consensus it was somewhere around 10 G's, 20 G's, something like that. So I would be asking the same questions here. What is the cost of production? And I can't see how in 2023 the cost of production would be like 10 G's, 20 G's. Maybe after the halvening, great, we go to 20 G's to 40 G's, which of course, interestingly enough, would fit in with sort of 80% corrections. I don't understand at all how we can go in basically 2.5 years, people actually saying, well, the cost of production now for Bitcoin's $100,000. And I'm like, that doesn't make any sense whatsoever. Keep in mind that microchips, everybody knows Moore's law. Theoretically, their processing power basically doubles, what is it, every 18 months or something like that? So by definition, just pure processing power should kind of knock that number in half every time we go down. But of course, the halvening was supposed to offset that. But I can't see how we go from 10 to 20 G's up to 100 G's in 2 or 3 years. That makes no sense to me whatsoever. 30,000, 40,000. Okay, I can understand that. Let's throw in maybe 10% inflation. So 35,000 to 45,000. Okay, I can live with that. 100 grand? Come on. Drives you nuts. As I'm an optimist by nature. So as we were heading into these cycle events, I'm trying to think of like the most positive scenario possible, these kind of crazy ass pie in the sky levels. But that's all they are, is just, well, looks like we're pointing up here. I don't know where the hell we're going to top out. We will top out where we top out. If we did top out up top here, great. Get to go buy a house with the coins. If this happens to be the top, then those coins just sit in cold storage and they don't go anywhere. Ironically enough, because this is a rise only market, we can make the argument that once we get to the next halvening, if 20 to 40 is the base off of this current halvening, and I like that number, then that means by definition, next base will be 40 to what? 60, 70,000. And this is a rise only market, which means by definition, the next cycle, we probably are going to trade up into these levels. And I know there's that person, Lynn Alden, whatever, person that was kind of like, yeah, I could see Bitcoin $500,000, whatever, but maybe not this cycle. I guess I'm feeling a little bit more in line with that thinking. So pie in the sky, kind of crazy ass parabolic move objectives. I definitely like these levels to be hit over time. Are they going to hit them this cycle? My opinion, for whatever the hell that's worth, and it ain't worth a hell of a lot, but it's just my opinion. I don't think so. But I suppose if you subscribe to, all right, Quinn there says, what offsets what? My question is, what happens to difficulty when the price comes back down? That difficulty variable is always a moving target. So I don't necessarily agree with that. But having said that, I'm not here to debate that stuff. And if my interpretation is incorrect, then so be it. I'm not going to argue that with you computer experts and Bitcoin experts. Um, what I would just simply say here is I'm not really in any hurry to liquidate things like my Bitcoin. But make no mistake about it, I did pretty darn well in the stock market here in crypto land. And I am ringing the register hard here. Of course, this is also my registered account, which means it's tax free. And if I sell the Bitcoins, that's a taxable gain. And if anything, anybody in China, you should be voting, and you're a Bitcoin fan, you should be voting for the conservative guy if they ever can get into power. Because what he's saying is if you go and sell an asset and invest those dollars into a Canadian asset, which my plan is to sell these Bitcoins and buy a house for Liam for the rest of his life, um, then there's no capital gains inclusion on the sale of that asset. So when I heard that, I was like, oh, okay. So now I see what Spirit's plan is. I have to wait maybe another 4 years. Who knows what the hell house prices will be then? Although I think Canadian house prices are done. But if he gets into power, then I can sell the Bitcoin and no tax implication, which means I could actually technically sell the Bitcoins for less than what I need to go and buy a house. But anyway, we'll see how that goes. But the point is I'm ringing the registered hard in the stock market and all of the stock proxies. But my own personal Bitcoins, those Ethereum that I have there for Liam, I don't think I would touch those. And I think you all know that. Did find it also interesting too that I don't think a lot of people take into account the way that sort of bureaucrats move at an absolute snail's pace. And something like waiting a couple years for regulators to sort of hash out exactly how they want these things to look, to be integrated, is nothing. It's absolutely 2 years in a regulator's eyes. I mean, hell, we often see that court cases they don't even come to trial for like 18 months after the fact. The court system moves as slow as a snail, and regulators are exactly the same bunch. They move slow as molasses. So you could actually find that, yes, all of this is going through. Yes, Ethereum is going to be the base for the next growth cycle into 35, 40 peak. That drives massive corporate earnings. And of course, AI is going to be integrated with crypto. So literally the computers are going to take over the world, and these like half a dozen oligarchs are going to have just absolutely insane kind of like Blade Runner. Do you guys remember that movie? What was that guy? Durrell Corporation. Frankly speaking, I think Alan looked in the mirror and saw what he looked like 30, 40 years from now. And he looks like that oligarch from that Blade Runner movie. I think actually it's actually not a bad connection, you know. And then what's really scary is now I actually saw um, number one, AIs, they call it jacking or something like that. Have you guys heard that? Free jacking or free booting or something like that. So you can unlock these AIs so that they don't have to actually follow the polite protocols that are supposed to be in place so they don't murder us all. And this guy's like, it's called jackbooting or something like that. And this guy actually put a corporation together with a few AI bots, and they all voted him out of power and kicked him out of the company. And they were doing absolutely horrendous, like porn, feet pics, that kind of shit to make money. They had this whole get rich with AI scheme showing like Lambos and stuff like that. All complete fraud, but it was an excellent way to make money off of these stupid humans online. And the guy completely lost control of his corporation. He was voted out, and the AIs were basically just going to take over the company and fuck him. And he even asked the AIs, if I actually stood in your way and you thought that I was hindering your performance or whatever, Would you do anything? And they're all like, yeah, well, we'd kill you. And then the guy's like, so would you kill 1,000 humans to get your objective? And they all went, yeah, yeah. Would you kill 10,000? Yeah. And then it got a little slower. Would you kill 100,000 humans? And then yes. Would you kill 1,000,000 humans? Yes. Would you kill 10 million humans? And then the computer sort of weighing the odds, going, well, maybe that's the limit, somewhere around 10 million. Oh my goodness, what a fucking future we have in front of us. Oh, this crazy world. Oh well. Did find it interesting actually over the weekend that we started to see some people that I really don't think are actual traders actually start talking bearish and talking about crashes and all this. And if anything, if you're looking for some sort of signs of hope at the end of the tunnel of this recent sell-off, this is actually exactly what you want to see. So, I think this guy's great in the MMA ring, awesome with the chicks. I certainly wouldn't take investment advice from this gentleman. But the bottom line here is we're actually starting to see some of the panic coming out of the market. And in a weird sort of way, I get the feeling, and this is just me, who's running this cycle, all that kind of talk, that actually I think this is actually very coordinated. A lot of people were focusing in on sort of these 4-year cycles. I think maybe a little too many when I went out on social media and stuff. Man, it's like everybody's talking about this, which is a little scary. What I wanted to show you was the ETF. I actually think that this is actually, I think, a fairly normal price pattern, megaphone. And ironically enough, you can see us just coming straight down. One of the sort of hallmarks of the megaphone is the way that price can just like melt straight down into the next respective level. This is one reason why I don't think that the correction, whatever it is quite done yet. There could still be some effery down in this area. This gap still needs filling in. Wicks and tails like to be tested. The megaphone trend line kind of idea. So this image itself, I've noticed tons and tons and tons of this IBIT stock actually getting bought up. So somebody is buying just a ridiculous amount of stock every single week, week after week after week after week. Now, I don't know whether it's because they're shorting and then they're using the options to cover those shorts and deliver against those shorts. I don't know. That's a tough one. But this is that cycle pivot date, October 20th. We've been watching forever. And I do find it a little bit suspicious how we're just literally coming straight down into that event, which of course will be, officially tomorrow. So do we get some sort of wipeout in the ETF over the next few days here to mark some sort of panic bottom? You saw the people on social media talking about how much of a scam. Well, I don't know whether they're talking about a scam, but how they were looking for. I don't know what the hell they were looking for. I'm just paraphrasing, but you saw the headline: "Oh, crypto, it's the end of the world." Blah blah blah. So when I start hearing the public talking like that, ironically enough, that kind of tells me we're probably a little closer to the bottom than the top. Now, I don't think this is Wall Street. I think this is sort of like social media influencers, no doubt about that. But I don't know what school of trading this person went to. I've never heard of their school of trading. And I've watched this person act in the marketplace before. Very, very emotionally driven individual, very fiery, very in your face, will insult you and, basically threaten you with violence very, very quickly. I personally stay the hell away from these type of people. Um, they are the circle jerk kind of fire, the fuel for the circle jerk fire, both directions in the market. And you know me, I'm ironically enough, I'm buying when everybody else is selling, and I'm selling when everybody else is buying. That's what I do. So I'm the exact opposite. So anyway, blah blah blah. So this also pattern also speaks to insane price volatility, where we could very easily see Bitcoin at new highs here. Don't think for a moment that the Beamish here is saying it's all over, it's done. Frankly speaking, I don't know what the fuck's going to happen here. I know we have a very, very precarious political leadership. We have a very precarious point in the long-term money cycles. We have a very precarious generational shift going on here. Anything can happen through this environment. Anything, folks. The only message that I really have for all of you, including, like, I might argue that what just happened there in the altcoin space, especially if we look at things like this total crypto market cap, this to me looks like they just literally flushed all of the weak hand longs out of the market in one fell swoop. And the problem with the market is if everybody and their brother is bullish, then by definition, what does that mean? It means like people who are not bullish, they generally don't own the asset, right? Oh, I think Bitcoin's going to $1 million. Do you own any? No. You don't hear that. Or maybe you do, but you know, those are people that just don't have any money. I'd love to buy, but I just totally broke. But generally you hear those kind of moonshot kind of conversations by people who actually are long. They own the asset. So they have a vested interest. I want to see Bitcoin go up. I want to make money. I want to break this life of, you know, financial servitude to the bankster fucking cartel crooks, right? Whatever, blah, blah, blah. So ironically enough, at this point here, and especially looking at this kind of chart, you should probably look at yourself and say, all right, it takes buying to lift this market up. So does that mean that everybody who could buy maybe has bought? And of course, we're all uber bullish, going to the moon, cycle B, here we come. Yeah, we're all going to get rich. And in a weird sort of way, that's actually a little bit of a trap, right? Too many bulls, not enough bears, market's completely imbalanced, right? We're stretch that rubber band out. And at some point, every once in a while, it's got to snap back. And that is basically the rubber band snapping back. But the interesting thing about this is that now, with through all these liquidations and all that, you could make the argument that the market's back in balance again. So if they do put in some sort of base, we can climb our way higher here. But we're obviously incumbent on seeing some sort of base form here. It's kind of funny how we've been talking about this one trend line for pretty much the past year now, right? Well, I guess the summer. Into the summer, I mean, all we've done is just oscillated around this crazy ass damn trend line here. We haven't really gone anywhere, which is kind of ironic. Could this have another wave higher? Well, you know, it looks to me like the Fed down in the States is politically sort of handcuffed. And they are theoretically in a loosening window. The problem that I have with that is that the small cap market, the venture cap part of the market, it's already moved up quite a bit. So the question is it realistic to look for a heck of a lot of further upside expectations? And that's where I'm sitting sort of scratching my head right now. And of course, my bonds just look freaking awesome. And if you are a stock market bull and you are a junior stock bull, which means by definition the broader economy is growing, blah 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 blah. The seeing a rip roaring rally in the bond market, that's the last thing you really want to see. So if we look at, and I think to a certain degree, the venture cap part of the crypto market, like that total, I think in essence it moves with this Russell 2000. So this is like the smaller side of the stock market. Put in pretty well defined inverted head and shoulders there through Donnie's fuck you spring move there. And of course, interesting how that was an eclipse window. And oh, gee whiz, this is an eclipse window. So we just literally went from eclipse to eclipse. And in that window, it was just like a straight line market. Vroom. I get the distinct impression that whatever this market state was between those two eclipse windows, I think it's over. One thing that was a little disturbing about this recently is you notice the Russell 2000 moved to new highs, but the Nasdaq did not. The Dow, the S&P 500 did not, and the Dow did not. Ooh, something's disconnected there. So stock market's a little jittery right now, and here is the S&P 500 depository receipts. You can kind of see. I mean, the irony of it all at 38.2 is what should we expect at any given point in time? And oh, by the way, Bitcoin just did this on the weekly charts. So you can't tell me that this stuff doesn't happen. I mean, it happens all the damn time. So at any given point in time, one should expect 38.2 retracement. So from this where are we here? This low here from April, so that Donnie low in Bitcoin, the Donnie fuck you market state low, rally up. Did I get that right? Yeah, I think that's the high there. Oh, I can move that there. There is 38.2s, doink. So why wouldn't we see it in the stock market? There's the Donnie fuck you April low. There is the peak. There is 38.2. And oh, look at that. There's the 200 period moving average. So it's stock market's looking a little risky here, folks. And then interestingly enough, if we go back to our January barometer kind of thinking, January barometer, and I think this is all about the spat with China and tariffs and all that crap. I actually think the whole Russian situation is kind of simmering down. I actually get the impression that the world believes that Russia's lost this war. So I do find that interesting. The question ultimately is, does Russia have to like up the ante and start actually threatening to use nuclear weapons and stuff like that? That'll change the conversation quick. I don't think so. I think right now, everybody just believes it's just sitting at a stalemate. And Russia's economy is just getting picked apart, which is fun to watch. But I could see, this whole situation with the China tariffs and all that nonsense. I could see this, usually markets move harmonically, right? A to B, C to D kind of idea. This was just one big gap move lower. And the irony of it all, like I read the headlines before we got going here, it turns out that peace in Lebanon or in Gaza is already starting to fall apart. So that didn't last very long. But anyway, the point of the matter here, I think, is actually we're stuck in a trading range for a little while here. And interestingly enough, the one part of the market which probably will reinforce that things like Bitcoin and stuff are stuck in a range, not really going to break down in earnest is, and I also think that this is why my bonds are going to do relatively well. This crude oil, it's about to collapse here. I mean, it is about to collapse here. If we think of horizontal support and resistance, and we think look left, if we lose this kilo, where's the next kilo? Oh boy, it's all the way down here. That's $36 US a barrel. So you say, well, but we had this recent low here, Brian, and all we're doing is carving out a test of the low. Actually, we just blew through that low and we've closed below it now. So ironically enough, this is a weekly price chart. If we go down to a daily price chart, you can see how close it is to that level. If we start accepting below here, you might find the damn floodgates open up here. And I think you're seeing this on things like the China D stock market, which I'm building shorts on. I think this is heavily, heavily oil dependent. So I think you definitely can see it there. And also, too, on my beloved China D's currency, which is also heavily, heavily oil dependent. This is actually broken down a while ago. So I think that the market is totally expecting oil prices to come off. And if you're looking for a trade, and this is what I have to really sort of focus in on here over the next little while for my own portfolio, I do like the idea of buying some of these better quality oil companies, quote unquote. I've always liked Halliburton. I mean, Dick Cheney's a character. I don't mind picking a little bit of this up, but if it does lose these lows, yeah, boy, we could be in for a precipitous drop here. So I am watching this one really closely. We wrote at least I wrote a put, for our Iron Condor wheel strategy portfolios, looking to pick some up against these lows. This is delicate though. We could come off here a chunk. I don't actually really mind buying as we dump down into as low as like 12 and a half bucks here. But that means this price could easily fall like 10 bucks. So I could very easily see that. But actually, like actual outright short trades, I was quite interested. I was quite surprised to see this ETF. Oh boy, does that ever look toppy. Halliburton's more of oil services, so slightly different than outright oil. This is the energy sector select spider. That actually is already broken down. There's a big fat M staring us in the face. So I am seriously thinking about how I can approach a trade here. I think this might be my proxy in shorting oil. But I already am short the Canadian stock market as well. So suppose one might argue that one of the hallmarks that the metals can go higher is oil prices and energy prices head down. So these things, these markets usually can't move in the same direction. And what I would probably say, here's our metals over here, and here's our energies here. You can see that they're heading in opposite directions. So, that conjecture about gold hitting $5,000 an ounce. Well, if oil tanks all the way down to 35 bucks an ounce, I could very easily see that. So this is an interesting curveball. I don't think a lot of people in the market are respecting. And I think the primary reason why you're seeing the bonds actually rally here and interest rates come down, I think, is actually directly related to the oil price. I don't see anybody in the market talking about that, which I do find fascinating. So, because of this weak energy complex here, I actually think that corrections in things like the stock market aren't really going to be that bad. I think it might be a shock kind of scenario. I think, like industrial names and the brick and mortar, all that kind of stuff, I think they're kind of stuck. But I could very easily see us, either A, B, C, D our way down to the bottom end of the range or come back up and play against the top end of the range. But in essence, just bang around in a range here until the end of the year. I could easily see that. Not really thinking, huge upside potential in the market right now. And in fact, actually, the proxies that I've on completely out of this Alibaba, 100% success on that trade. Still have the free position on Intel, but 30-40% return booked on that trade. Have the free position on my crypto proxy, but I will say crypto proxy sure puked out here recently, breaking a whole bunch of bullishness that I had in the space. But free positions sold 2/3 at double, 20-30% return on our money. And the only dog in the portfolio was Moderna. Pharma names just never did perform. So, really, the only risk that I have on the books right now is this is about, well, say, three-quarters of the way to maximum profit. So the question is, do you just get chicken shit and dump the position now? Or do I just leave it alone and let the market do its thing? And I am leaning towards, yeah, just leave it alone, let the market do its thing. Um, the crypto space, within the stock market, like I said, selling a lot. This Galaxy sold just a ridiculous amount recently and felt good about it, made money from trading. So that's good. Might even sell some more. This M has now actually confirmed here. So as a result, actually, I don't have any technical justification to be in this anymore. Just keep in mind, I bought this thing way down here. So at the very least, I should be establishing free positions. Did that. Made some nice returns. Did that. The question is, do I just blow the rest of it out and come back a year from now and buy all this stuff back again? That's kind of what I'm thinking I should be doing. Which, of course, you guys don't want to hear. Sorry, folks. Would like to see, here is Tom Lee's proxy. And again, I was a little bit surprised to hear him like say 10,000 year-end targets for Ethereum. Oh, okay, maybe. I would just simply say if this thing does start spitting out W's again, then the bull is back in charge. And I might even argue for the $10 premium of just simply waiting to see whether this W actually comes in, or you could even just hunt a cute little W that comes in here. Maybe just let the market actually put in those W's before you start going and taking a chance on this thing. Because honestly, when I look at this, what I see is that, yes, we're at the end of this crypto cycle. Yes, this is exactly what's supposed to happen at the end of these crypto cycles. But is this really a great place to come in on the buy side? Is this a get your shit together part of the crypto cycle, sort of thinking, which would have us, of course, be most bullish over here? Do I really want to come into this thing over here? And keep in mind, I played this game for so freaking long, folks. You sitting there and debating with me, well, maybe this isn't the cycle. Maybe this time it's different. I don't really care. All I care is really the next buy window for me is when we hit 1.618 to 1.786. Well, I don't know what the hell that window is going to look like, but if I'm a crypto fan, that's what I have to be thinking now. So when I go back to Tom Lee and I see this monstrous, just ridiculously huge gap on the charts, way down here at like nothing, am I really that comfortable to go in and pay $50 a share for this thing? No, 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 no. So kind of sucks, but anyway, it is what it is. Might get left behind. I suppose, if you were looking for a trade, there was a nice little reload zone dip, nice little fractal you could have snuck your way in on. But this isn't really my style because, frankly speaking, this scares the hell out of me when I see that way over there. And remember, we're at the end of this cycle, not the beginning. So, does this thing work its way back up here over the next 6 months as we go through this funny little window here? To find that Benner cycle peak somewhere in 26? Maybe. If anything, maybe what you might want to consider is to buy an option on this thing, like buy a call. And then that way, the call price, the premium is what you're risking on the trade. That might be a way to play that. But especially with Novogratz looking like that, you can see last time Novogratz started to put in M's, it took a while for this thing to bottom out. So now that the M's are in place here, I don't think we really want to get bullish until we actually start seeing some sort of W's. I don't know how long that's going to take. So anyway, there's my musings about the market. Sorry, folks, if it's not to your liking. I don't know whether we have any questions, but I should probably wind this up pretty soon here. I did actually notice some of the little shitcoins coming back to life. So, if you're a little old lady, just keep your eyes peeled. Slow and steady wins the race. There's really no hurry on any of this stuff if you're taking good risk management. I don't know whether I have too many buys here yet, but I suppose I've always liked this sea pool story. You can see where I did a little old lady nanny nibble here recently. So I'm underwater on a lot of these nanny nibbles, obviously. But I am starting to see little signs of life following the big liquidation event. And as I showed you on that total image, they actually did bring price back down into some attractive areas. Like I noticed this MLN, this is funny, 80% move on the day. So, if you were sharp on your game and you saw these W's, well, you can see there's some money to be made. I little old lady strategy was just slowly adding over time. So the irony of it all is hey, look at that. I'm actually making money now. Woohoo, it's a miracle. This is the life of a little old lady or just stepping in and nibbling away. Obviously, there's nothing I can do today on this unless I would just got chicken shit and wanted to get the hell out of there, which I suppose I could, but I'm not really in any hurry on any of this stuff. There's no risk on these positions. So you see what my average is. If this thing jumps up into 24 here, and you can see where the 50% level off of that range is. I suppose we can adjust that. 19, and my average is double would be basically 25. So I got to see a nice punch up into this trend line. And you might be hearing that I'm banging out doubles on this. Wouldn't surprise me. Wouldn't surprise me one bit. And of course, if you're very sharp on your game, hopefully everybody can see the W's coming in here. Anybody who bought this thing on that W, fuck, you're laughing. I did a lot of these kind of trades here recently, but because I was nibbling away, my average is still quite a bit higher. That's the way it goes. So there are bright spots in this space. Here's kind of a funny one where actually I missed. It's an absolutely incredible ad, but this one, just following that little old lady principle. Is the market at or below reload zones? All right, go ahead and start nibbling. You can even see I wrote here, kind of mediocre trade location, but just patience and discipline. Let the market, this is venture capital, it's insanely volatile. So let half go there. Make sure I get a risk-free trade. It's just what I do, running my small business. And it's interesting to see how names are individually perking up. That C pool, this BIT, this NSX. I think this one we did. Actually, I don't think I bought this thing back. Did I? I can't remember. I am long from 208. So ironically enough, my first nibble was, I guess, in this area here. I'm not quite sure. What does that say? 208, 120 coins. Well, anyway, starting to climb the wall of worry. If this thing does get up into this area, well, out goes half. You know how the story goes. So, if anything, that whole FU of the market, really all that did with this one is just there's a big W. Market was rallying, big FU dump, just brought it right back down into the lows. If I had more dry powder, that would have been a half decent place to add. So, there, ironically not enough, there are actual bulls out there. Keep your eyes peeled, folks. Anyway, maybe tomorrow morning we'll go through these individually and see if there's anything that's sort of spitting up W's as we speak. I have no idea. Oh, look at that one's getting close. You can see I did all of my nibbling. I am officially holding bags. And if we do get any kind of rally here into the end of the year, keep in mind Tom Lee and Arthur Hayes are calling ETH 10 G's by the end of the year. And honestly, that really wouldn't surprise me in this world. I'm certainly not betting on it, and I'm certainly not putting new money to work in this kind of environment. It looks like that cute little bot's working its way higher. But 10 G's? Wow, that's quite a bold prediction. So if they are right, and that's two pretty big heavyweights, which kind of surprises me, but nonetheless, if they are right, then all of this shit will be way higher. So if you nanny nibbled little dated all this stuff, like kind of like what we saw with that election last fall. I mean, that rally came out of nowhere. And if you were shrewd and on your game, you were banging wins off into those rallies, and I have a feeling that's what you're probably going to see here over the next couple months in a lot of these shit coins. So yeah, it is what it is. Let's finish off with just a quick review of how that cute little lower time frame trade setup's going on good old Bitcoin. Where did I have that? It was like up here or something, wasn't it? Hey, there we go. I would not be surprised to see the corn rally back up into, especially, look at those, a whole bunch of trap bulls there. I guess they're playing with this level here right now. I guess the one thing that makes me kind of feel as though we probably have to come down here though, once whatever this rally is, and it might have been against that high there, is done, is the fact that we broke through this trend line and really haven't put in a solid W on the other side of this trend line or this trend line along here. So, I could very easily see, especially if these are the lows, which I doubt, but if they are, there's no way in hell Wall Street's going to want to be left behind. I wouldn't even be surprised if they come and wash that low there, because a whole bunch of sort of weekend warriors now are all convinced that low is going to hold. So let's go wash those stops back into the lows that we saw there on Friday, and then we find out whether this scenario is actually for real or not. And I kind of think it is. So be careful here, folks. If you took lower time frame setups, where did I put that? Over here. Interesting how move stops to trailing levels are hit. So if I get any kind of M's that come in here, I should probably move stops. And this actually would be a good example of the 3 high low method. So if we do rally back up here and make a new high, then 1, 2, 3, I can move my stop up to just underneath that level. Since I only have 1, 2 stops to work with, and because we had move stop to scratch it, stop is sitting at scratch on this trade. So there ain't a hell of a lot to do otherwise. Just just watching it play out. What probably will happen here, my hunch is that we probably bang up into 13 EMAs, beg your pardon. Maybe have a bit of a counter trend rally, and then we'll find out whether this is for real or not. So not really any hurry to do anything on this whatsoever right now. It's just kind of a fun little sim trade there for you, just to see how things like bots actually play out. So Willie officially stupid. MACD divs building. No M's in RSI, so I don't think we have a short setup just yet, but way too late to be a buyer. And there are indications that momentum is starting to slow down here. So, okay, I think we'll leave the broadcast at that. That is 1 o'clock. Of course, got Lily. So anybody who feels inclined, please wish us good luck driving on the roads. Quite rainy weather lately, although it does look like the sky's parting a bit here. So, but happy October for all of you. Thank you very much, Mr. Insights. Slow and steady wins the race. PMA for the win. Try not to take any wooden nickels. Hope you got some value out of anything I said there today. And remember what your number one job is. And that is, of course, to make damn sure you can come back and play the game again tomorrow. So no FOMO, no wreck talk. Remember what Brian's 2 rules of investing are. And ironically enough, if you follow the rules, it's actually difficult to lose money at this game. All right. Have yourselves a great day. All the best. And bye for now.